Hey everyone, ever wondered how to start trading in the stock market? In this video, I'll break it all down in simple terms: what the stock market is, how to invest, and where to start as a beginner. Let's jump right in. The stock market is where companies list shares of their ownership, called stocks, for people to buy and sell. This allows businesses to raise money and investors like you to own a piece of companies like Apple, Nvidia, and IBM. It's like a giant marketplace where buyers and sellers trade stocks based on their value at any given moment. Investing in stocks can help you grow your money over time. Historically, the stock market has delivered an average return of about 7 to 10% per year. But remember, with greater potential rewards comes greater risk. It's all about being informed and starting smart. To get started, you'll first need a brokerage account. Think of it as your personal wallet for the stock market. This is your gateway to buying and selling stocks. In the US, you can sign up with platforms like Fidelity, TD Ameritrade, or Robinhood, while in Canada, options include CIBC Investors Edge, TD Direct Investing, Questrade, and Interactive Brokers. Once you're set up, log into your broker's trading platform and choose which stock to buy. Here's how it works. Once you've chosen a stock you want to buy, like ticker APL for Apple, you'll need to search for its ticker symbol on your brokerage platform. Then, decide how many shares you'd like to buy. Next, place your buy order, and once the order is filled, congratulations, you're now a shareholder in Apple or whatever company you've chosen. As a shareholder, you own a small piece of that company's growth and success. When you're ready to sell after your stock has appreciated in value, it's just as easy. Simply return to your brokerage platform, select Sell, choose how many shares you'd like to sell, and you're done. As a beginner, focus on large, stable companies known as blue chip stocks. These include names like Microsoft, Google, and Coca-Cola. You can also consider investing in ETFs, exchange-traded funds. ETFs like VOO, which tracks the S&P 500 index, or QQQ, which tracks top tech companies in the Nasdaq, give you exposure to multiple stocks in one simple investment. ETFs are a great way to reduce risk while you learn the basics. Let's look at a practical example. If you had invested $10,000 in ETFs like VOO or QQQ 10 years ago, the results as follows. VOO, over the last 10 years, VOO has averaged annual returns of around 12.67%, including dividends. A $10,000 investment made in 2014 would be worth about $33,000 today, reflecting the strong long-term growth of the broader U.S. market. QQQ, the tech-heavy Nasdaq 100, has seen even higher growth. QQQ average annual return over the same period is closer to 15%. A $10,000 investment in QQQ in 2014 would now be worth more than $40,000, driven by the performance of major companies like Apple, Microsoft, and Nvidia. There are two key areas every investor should explore. Fundamental analysis. This involves looking at a company's health, its revenue, profits, and future growth potential. Technical analysis. This is all about reading charts to spot trends and make decisions based on price movement. Start with the fundamentals and technicals and take your time. Investing is a long-term journey, not a quick race. Here are a few quick tips for beginners. Start small. Invest only what you can afford to lose. Diversify. Don't put all your money into one stock. Explore ETFs like VOO or QQQ for simplicity and growth potential. Keep learning. Markets change, and so should your knowledge. And most importantly, stay patient. Good investing takes time. That's a wrap on stock market basics in 5 minutes. If this video helped, give it a thumbs up and subscribe for more beginner-friendly guides. See you in the next one.